Hi friends, I'm back with one more video, very interesting video. Let me take you to the PPT. So looking at the PPT, today's video is on when to deploy debit spread, when to deploy ratio spread of 1 is to 1 is to 1, okay, and when to deploy the ratio spread of 1 is to 2. So we all know that we have different market structure. Okay, when you look at the bank nifty or nifty chart analysis, like every time we tend to see different market structure. We need to have the view. Okay, debit spread is all about directional trade, so we need to have the view. So we have to be like very much comfortable in terms of when exactly we can deploy the debit spread and when we have to go for the ratio spread of 1 is to 1 is to 1 and 1 is to 2. Okay, let me take you to the next slide. Okay, so this is the slide. I think this looks very cluttered, but let me make your job very easy. Okay, so on the top right, I've just taken, for your reference, I've taken the payoff of debit spread. The prerequisite for this thing is, friend, I think you need to be aware of what are the debit spreads, okay, and also what is ratio spread. Okay, if you're not comfortable or you're not aware of the debit spread, so you can always revisit my YouTube channel. So there is a separate playlist on the debit spread, but the prerequisites for this video is like you need to be at least aware of what is the debit spread. So this is the payoff graph of the debit spread, this is the payoff graph of the ratio spread, and this is the payoff graph of ratio spread 1 is to 1 is to 1. So let me take a pen and let me show you. Okay, so this is on the call side. Okay, this is on the call side, this is a bullish, right? This is a typical debit spread. Okay, call debit spread, the bullish debit spread. If you look at this payoff, this is typical 1 is to 1 is to 1. Okay, this is the ratio spread of 1 is to 1 is to 1. And if you look at this payoff graph, this is typical call debit spread, a bullish spread of 1 is to 2. Right, I'll not explain, but let me give the reason why we call this as debit spread. This is your buy position and this is your sell position, right? This forms your debit spread. This is your buy position, one with one lot. This is your first sold position and this is your second sold position. So 1 is to, right, 1 is to 1 is to 1. Okay, if you look at this 1 is to 2, this is your buy position of lot 1, and then you have two sold positions, so that's the reason we made it as 1 is to 2. Okay, this is your 2. So this is your debit spread, this is the 1 is to 1 is to 1 ratio spread, and this is 1 is to 2. Okay, let me clear out. Okay, I'll just clear everything. Okay, in line to this, as a contra, we have the this is the bullish debit spread, right? Opposite of call is your put side. All right, this is your put side. Okay, when we say put side, whenever we are bearish, right, whenever the view is bearish, we go for the put debit spread, right? This is opposite of the 1 is to 1 is to 1 is the 1 is to 1 is to 1 in the put side. This black line is where your market stands. Okay, right, this, I mean, just taking an example, right? Let your market stands here, so you buy one deep OTM call and then you sell one, right, to just to have the 1 is to 3. So I've explained you about the risk to reward and everything in the debit spread playlist. You can always visit my playlist and go for the you can just refer those videos, but today we are just going to discuss about, right, when to deploy debit spread, when to deploy ratio spread, and when to deploy ratio spread of 1 is to 1 is to 1, 1 is to 2. Okay, so I've just given you a context of what is the debit spread. Okay, if you look at, this is the market stand, right, the black line, this is I've given a reference where the market stands. Okay, so what will happen, let's say market stands here, the next day market makes 5% gap up, right? So you will get into profit, this is your profit area. Okay, so what will happen with the ratio spread of 1 is to 1 is to 1, you know it, 1 is to 1 is to 1, what will happen, you are safe till this. Look at the blue line, right, blue line. The reason why we have deployed the ratio spread of 1 is to 1 is to 1 is like you have the view of, right, sideways to bullish, right, sideways to bullish. But the very next day, if market gaps up by like 2%, you will end up into loss because your blue line supports until here. This is something like market should move slowly, like 1%, 0.5%. Then this blue line will also keep increasing. This will capture your entire green. The third day the blue line will capture this entire day. Fourth day the blue line will capture this entire day, and then your fifth day this blue line will capture this entire zone. So we're not discussing about uh, the 1:1:1 because we have everything, but I'm just giving you an insight. All right, so let me clear out. It is all okay, right? In line to that, you have the debit splits on the put side. Okay. For your reference, right? For your reference, I've also taken one example. Okay, just in case if someone is not comfortable, I've taken the same bank nifty. This is your debit spread. This is what I was trying to replicate in the PPT, right? This is your debit spread 1/1 cell. Okay, if you look at this, this is your ratio spread of 1:1:1. See, the reason I had 1:1:2 is like ideally this is like only one leg, but I've just increased the quantity to make my loss on the downside to minimal. Okay, if you look at this thing, this is 1:2. That's what we discussed right here. Okay, debit spread 1:1:1, 1:2. Okay, that's what I'm just trying to show you in sensible. All right, so now let me take you to, so if you look at the debit spread, right, you know, right, debit spread as your maximum profit is locked, right? Even if market moves 10%, 20% upper circuit, your maximum profit is locked. You'll not end up into loss if the market makes a up move of 10% or 20%. Whereas in your ratio spread, you look at the blue line, see, right, you will straight away start seeing the losses. See, until here you're in profit. When market moves like 1% tomorrow, right, you will start seeing the losses. Look at the black box, right? The next day t plus 0, you will see the loss of 1985, right? So ratio spread, we deploy the ratio spread in such a in case if you have the view of sideways to mild bullish. Okay, you have the view of market saying that okay, market will stay sideways and then it will start moving. So whenever you go close to expiry, this blue line will capture the way I've shown it in the earlier slide, right? See, let me show you one more. So we are on Sunday, right? Just keep a note on this blue line. As and when we go close to the expiry, look at the view of the blue line. The blue line will become flat. So now we are, see, initially your loss was showing almost like 3000, like 2419 with a move of 1.25%. So what will happen if one day passes, right? It's 1.25%, you are in a profit of 1475, right? And when you go to the next, I'm just trying to simulate. If you go to Tuesday, see the blue line will keep becoming flat and flat. See, the next day, check. It's Thursday, right? There's some issue. See, Wednesday, your blue line is almost covered the green area. So now, even if market stays here on, let's say, Wednesday morning, and there is a quick up moment of almost like, even if there is like 2.8% or 3%, you'll not end up into losses. So this is the way we trade the ratio spread, and this blue line is very important. I'm just planning to make a video on the blue line. Okay, let me take you back to the PPT. Okay, so now here comes the actual video. So when to deploy what. Okay, so if you look at the bottom side, right, this is the different market condition. So we call this as a parallel channel, right? So let's say your nifty or bank nifty is having this pattern, right? It has a support and it goes to this resistance, it comes back, it takes a support, it goes, it takes the resistance, it comes. So this is forming a, right, equal lows and equal highs. This could be one of the pattern. The other pattern would be the symmetrical triangle pattern, so wherein your nifty goes up, it takes the resistance over, it comes down and it takes a dynamic support here. So this has this typical pattern. So this is rising wedge. Okay, support, resistance, support, resistance, support, resistance. So we see all these patterns, right? So do not go on the naming convention, friends. Basically, if you look at your chart and everything, so each and every stock be it your nifty or FNS stocks, so that has to form these patterns. So we call this as like parallel channel, this is like symmetrical triangle, this is your rising wedge, this is your falling wedge. Don't go on the name of the patterns. So see the psychology. It takes a support here. Okay, price went up, it took a resistance. Okay, again price came down, it took a support. So the moment it took two supports, so whenever the price goes up, right, it has like two resistance now. Now the expectation of majority of traders will be whenever the market falls, it will take support at this area, because in recent time we had two supports here, right? And whenever market makes a move, so it is bound to take the resistance, not bound to take the resistance, but probability of that stock taking the resistance is high, because it has already taken the resistance for two times. Okay, so this, whenever we select two or more resistance, so that will form a very good resistance, and on the downside it will form a support. So the reason why see, at times what happens at one day market has to breach the resistance, right? So it breached the resistance, it made a up move, again it came down, it took the same the earlier resistance, it took this support, and now it is making a move. So these are called breakout trades, right? So all the breakout trades, it will give a very wild moment, right? It can go like, it can make a bigger moment. Okay, so there is a reason why I'm just trying to explain you. Similar way, you have triangle pattern. See, this is support and this was resistance, right? Second time, rather than the stock coming here, it took the support here, so there was too much of pressure from the buying side. So the next time, rather than taking the resistance somewhere here, there was equal amount of pressure from the seller, so they started selling it. So this is forming a kind of triangle, right? So this is a support, dynamic support and resistance, and you, by this time you should know, right? The stock had a breakout, it came down, it took the retest, and then it will fly like nothing. These are the breakout trades. Similar way, right? Resistance, 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 support, support, support. It broke the resistance, it will retest, and then it will make a bigger move. Same, like same on the bottom side, it took the support, it broke the support, it went up, and then it will make a big downside movement. Same with your parallel channel. Let's say the market has broken this support, right? It will see, needless to say, this will not take always support. See, whenever the support is broken, right, majority of the trades, right, it will come up, it will take the previous support as resistance, and then it will fall down like nothing. Same with falling wedge. Don't go based on this. So now the real video starts, right? So when exactly we need to go for debit spread? Okay, this is the call debit spread, right? The bullish debit spread. Will come to the bearish one. Let's focus on these three trades. Okay, I'll just erase all. Right. So let's say you can deploy all these trades, right? Uh, your 1:1, right? Your 1:1, and also your 1:3. Okay, you can deploy all this trade at this point when it is taking a critical support. You can deploy all these three strategies at this support. Even you can deploy it here, even you can deploy it here. All right, reason being, okay, you are bullish and the market is going up, so you can deploy all these trades. Okay, it doesn't make sense to deploy this debit spread, all these trades somewhere here. Okay, there is a strong resistance, there is a strong resistance, there is a strong resistance. Until this resistance is broken, right? So until then you should not be deploying the bullish call spread, because there is a strong resistance, so market can come down. All right, I'll take the reason. What happened? Okay, I'll just erase everything now, right? Let me say, so let's say your market, maybe you are here, right? Market went up, it took the resistance, it came down, right? Needless to say, you will not definitely go for the call debit spread, but here you can go for put debit spread, because market will come down, because it went up, it took the resistance, right? It had a decent fall, and there is a strong support here, right? So market might fall for 2 to 3%. So let's say this range is like 2 to 3%. Okay, so market had already fallen like 0.5%, so market might fall for another 2 to 2.5%. So then you can go for your debit spread. All right, you can go for your put debit spread because market is bearish. When market stands here at this support, or maybe at this area, or maybe at this area, let's say market stands here, and you see that okay, you have a resistance here at 3%, right? Market is here from this position to this position. If you see 3% of the gap, then definitely you can go for the call debit spread because you have 3% of the up move potential, because you have a strong resistance over here. So it is not only you can go for debit spread here at the critical support or at the critical support. Even if the market comes, it takes the support and if stands here, so this is like double confirmation for you. So rather than taking a debit spread here, so what will happen if you take the debit spread here? Market can even break down, market can go into this position, right? The moment you take the debit spread, call debit spread, market can go down, right? And then you'll end up into loss. So wait until the market comes here. It took the support, now it started flying. So this is the best position for you to go for the debit spread. It all depends on your individual risk appetite or your perception, right? So few will go for debit spread at this position, few will go for debit spread at this position. So even if I look at the example, right, I can go for debit spread here, or when the market is here, I can go for the debit spread. I can go for debit spread here at the critical support. I can go for debit spread, call debit spread. I mean to the bullish debit spread. Even I can go for the call debit spread, but I'll not go for call debit spread at here because I know there is a strong resistance. I cannot go for call debit spread here because I know there is a strong resistance. Either this break even, either this resistance has to be breached. So then I'll go for the call debit spread until and unless this breached by resistance. I'll not even think about going for the call debit spread. But you can take a risk, not risk actually, you can go for the put debit spread because the bearish, it took the resistance, right? Now it is coming down. Either you can deploy a put debit spread here, or you can deploy a put debit spread here, or else when the market comes down here, right, if you have like 3% or 4% of what is a range with a strong support, so you know, right, once the stock took the resistance, so you know it will take the support at this point. So you can just deploy the put debit spread, I mean to say this debit spread. All right. So I think you might be wondering why I'm not discussing. I've discussed about 1:1 on the call side. I've discussed about 1:1:1. I've discussed about 1:2. This is two, basically not three, two, and even I've discussed about this debit split. But I've not been discussing more about this one is to one on the downside. Okay, so friends, I think by this time you should know, right, this two trades. So let me erase everything. There is some issue with my mouse. Okay, let me erase. Okay, right. So we have discussed about all these strategies. Okay, but we have not discussed about 1:1 on the downside. Okay, so friends, whenever you have a bearish view, right, the only strategy what you have to deploy is only this debit spread, put debit spread. Reason being, right, let's say market stands here, you have a bullish view. Okay, your market stands here, you have a bullish view. Okay, next day market made a lower circuit of 5%, right? Your maximum profit is logged here. Even if market makes a down movement of 10%, 20%, you will get your entire maximum profit. But let's say you have deployed a 1:1:1 or this one, or 1:2 on the downside. So let's say this is your market stands here. Let's imagine market made a move of 5% down circuit, right? Though it looks like you are into your green zone, but check the blue line. Blue line will support you till 1%. I told you, right, I've shown you the simulation. Blue line will go flat and flat as and when you go close to the expiry. This is the way the blue line will behave. So this, let's say this is your Monday, this is your Friday, right? On Monday your blue line will become more flat, so that you have more safety. From here till here you will have the safety, right? So let's say Tuesday, this is your Tuesday, right, and this is your Wednesday, right? So the range will increase, so blue line will support you till here, and on Thursday your blue line will almost cover this entire range, right? So though it looks like okay, even if the market falls here, the next day you will get into huge losses, because market cannot have bigger gap ups. But when you look at the breakdowns, market can go 5% down the line, market can go 3% down, 3% down. Okay, I'll erase everything. This is what I'm trying to say. The idea of deploying the one is to one, or this is more dangerous. So let's say your market stands here, you have two sold positions. See, when we say one is to two, right, one is to two, you have only one buy leg and then two sold legs, so one is naked. So let's say tomorrow market makes a move of just 2%, right, your blue line support is still here only. So whenever the market makes a gap down of 2%, you will get into huge MTM losses. All right, because this blue line will become flat and flat as and when you go close to the expiry. Okay, so at least this stands good, one is to one, because you have your buy position here, you have your sold position, first sold position here, and then you have your second sold position here, right? At least you have this range of 2%, right, based on the strike selection. But look at this trade, you have one buy positions and you have two sold positions, right? This is flat area, this is a flat surface area, but do we have the flat surface? This is almost like a triangle, right? If market makes a move down move of 1%, or let's say 3%, you will get into huge losses. So that is where, friends, we should not be deploying the this ratio spreads on the put side. Ratio spreads make sense at least on the call side, though this gives you loss with a bigger momentum, but at least you will not have that bigger moment, right? Have you ever seen a circuit of 5% circuit on the upside? No, right? Have you ever seen like bank nifty opening with 3% gap up, 4% gap up, 5% gap up, which is very rare? But we have been seeing bank nifty can make a lower circuit of 1%, 2%, 3%, 4%, 5%. We see too many gap downs but not the gap ups, right? At least we are good to deploy the ratio spreads. When I talk ratio spreads on the upside, but do not go for the ratio spreads on the put side, right? By this time you should know, because on the put side, just a one panic situation is enough for the market to fall down like anything. So every time when you go for the bearish view, just go for the bearish pure plain vanilla debit spread. All right, friends. So I've given you this market structure, right? I'll just leave it to you, because whenever you go for debit spread, right? Whenever you go for debit spread or one is to one or one is to two, you need to have the market view. Without the market view, because this is all about directional view. So I've just tried to explain you, right? When we have to go for debit spread with one is to one, or a plain debit spread, right? This one, right? So just to recap, right, we can go for debit spread when your view is bullish, super bullish, bullish or super bullish. Let me take you, we will talk only about the upside. Okay, you can go for debit spread when your view is super bullish. All right, you have to go for ratio spread, you have to go for ratio spread when your view is see, sideways to, right, mild bullish, this way. Okay, you got the reason. Because whenever you go for one is to one is to one, you need to have the view of sideways to bullish, because by the time it is sideways, after 1 or 2 to 3 days, your blue line will, this one, this blue line, though this is covering here, so Monday, on Friday your blue line will be safe until here, on Tuesday your blue line will come here, on Wednesday your blue line will be here, on Thursday this will almost cover your entire graph, right? So which means that the moment the blue line goes flat and covers, you will not see any losses even if your market stays here, and if it gives a quick momentum of 3%, 2%, still your ratio spread will be able to absorb the losses, and in fact you will get into profit. Okay, and when should you go for one is to two, right? When you have a sideways to, right, more sideways to, like minor bullish, because you have two sold legs here, friends, you have two sold legs here when compared to one buy, right? One is naked. So when you see quick momentum, I'll show you. When you see this is the 1:2, right? Whenever you see quick momentum, your blue line support is still here. So next day morning when you have 2% of gap down, you will end up into losses. So in case if you have, so that's what I've told you. You cannot deploy uh, this one is to one and 1:2 when you have this breakout. You should not be deploying here. The only trade you have to deploy here is your debit spread. This debit spread, right? Even if this goes fly rate, you cannot deploy the ratio spread of either this one or 1:2 at this area. This is only for debit spread, because the breakout trades will give the momentum like nothing. All right, you can go for the all these three strategies at here I've already discussed. And even on the downside, do not go for ratio spread. When I say ratio spread, this ratio spread you should not be deploying when the market goes, because market will fall like anything. If the market falls like anything, you'll end up into losses. This is not a good strategy for the downside. This will even create more problems to you. So on the put side, you have to go only for put debit spread, that is plain debit spread, because even if market have a 10% circuit, your maximum profit is capped. Okay friends, so let me see, like I think I've covered majority of the things. Okay, so I think by this time, even if you see, the best thing would be, like friends, you have to just keep deploying the trade and see how the blue lines plays its major role. See what this is what I meant to say, right? I'll just get it to reset. See the blue line. Now this is Sunday. Actually, it is taking the Monday, but let me take you to one day back. See the blue line. The blue line gives. Let's think this is your current trade day, right? Your blue line gives support you till, see, only till 0.64%. The moment it goes up, right, you'll start seeing the loss. But whenever you go close to expiry, see, let's say you are on Tuesday. Let's see the blue line. Blue line gives support till like 1.97. You are only on a loss of 422. But on Monday, right, on the day of deployment, if it gives a great upside momentum, you will end up into losses. Okay, so all these logics about 1:2, 1:2, 1:1:1, debit spread, right? I've just what do you say, everything is there in my playlist. You can just go to the playlist. There is one playlist with name debit spread, entire end-to-end series, and there is one more playlist with my real trades. So when I say real trades, I've shown you all the adjustments done on my real trade, right? In terms of converting them to ratio spread. So basically we are not talking about the any adjustments over here. The purpose of the video is like when to deploy the debit spread, both on your call side and on your PE side. When to go for ratio spread 1:1, right? So there is no scope for put side. This is only meant for call side. Okay, at least debit spread you can go for call side and also on the put side, but there is no scope for ratio spread, right, of 1:1:1 and 1:1:2 on the put side, because if you go on the put side, you will end up into huge losses if you have a big gap down. Not even forget about gap down. Even if there is 1% or 1.5% of the downfall, I think you will end up into losses. All right friends, so friends, I think you might have enjoyed this video. I think this looks complicated. I'm not sure whether I was able to deliver looking at the, so for that reason what I've done is, like, even I took the example of the real trades, right, just to uh, show you the reference trade I've shown you in this sensible, right? So try to watch it for one or two times. I think you should be able to uh, understand. So let me just so I made a small note. So we talked about, let me give you like 1 minute. Okay, let me see whether I was able to cover the entire thing. Okay, sideways applies for, yeah, the other thing is, like, friends, this is very important. So this is not only for bank nifty, right? This applies for your FNO stocks too. Okay, let me, so all these strategies, right, when you have to go for debit spread, right, on the call side upside, this is not only for index, friends, this acts as good as for your FNO stocks. right? I've been doing these strategies in index as well as your FNO stocks. So when I say FNO stocks, try to create a wish list of 10 to 15 FNO stocks which has all the liquidity. If you end up into illiquid stocks, you'll end up into problems. So try to have create a wish list of all the top leaders in the sectors, come up with like 10 to 20 stocks, and then you can trade this plain debit spreads, vertical spreads into your FNO stocks also. All right, so that's one of the thing what we uh, what I wanted to cover. So I think I've covered pretty much, friends. So thank you for watching, the friend. Please keep sharing with your friends. So I need some sort of motivation from you all. Okay, so in case if you have any questions, you can comment. If required, I mean, I'll just reply to your comment. Okay, thank you, friends.